Hi everyone, today I'm talking about Wynn Stock, and I'm talking about this company because it's on a bit of a decline at the moment. And if you are one of the original subscribers, one of the people that used to watch me back in a few years ago when I started doing stock market videos, you'll know that Wynn Resorts was actually a company I was invested in. So I got quite a good knowledge of the stock and how the company runs inside and outside of the company. Now, just a quick brief detail about the company. If you don't know what Wynn Resorts is, it's basically one of the big major luxury brand hotels that you can stay in. They currently have 3 locations, which is in the newest location is Boston, which we'll talk about in a little bit more, Macau, which we'll talk about a little bit more as well, and Las Vegas, which is probably the most well-known one that is out there. So when we take a look at the Wynn Resorts stock chart right now, we can see it's trading about $108, and you'll notice there's just this big massive decline that's happened recently as well. It's been in a bit of a seesaw kind of motion at the moment. It doesn't exactly know where to go, but it is trying to push upwards slightly. And you see there we're down at 100 and about $108 right now as of today. Now, if you actually take back into May time, the stock was actually pushing towards the 200 range back there. And obviously, if we go all the way further back towards like 2014, you can see it was $200 stock back then as well. If we actually look at this little run up from 2017 to 2018, that is actually when I previously owned the stock, and then I sold out. I can't remember exactly what it was. I think I bought in about 120. I think I sold out for 200 and something maybe. I think that's exactly when I did sell out the stock. And then since then it's been on a massive decline. Two major reasons really for that. One of the major reasons being that the CEO and obviously the founder was Steve Wynn, and obviously he was such a great businessman, but obviously he had to ruin it, and obviously he's made some bad choices in life, and he's now stepped away from the company. And in that kind of period, it was a bit unsure where the company was going to go, if someone was going to buy out Wynn Resorts from here, if the company's going to carry on going under the Wynn name. And it's kind of now that Wynn have now got a new CEO that stepped in now, which is Matthew Maddox. He's been in since the 6th of February 2018, and since then he's taken over from Steve Wynn, and the company's carried on opening up the Boston resort now, which was kind of Steve Wynn's last kind of push really, or the last kind of thing he really did in the company. So when we look at the stock chart, we can see it's on a massive discount right now, and we always like to buy stocks that are on a discount and not 52-week highs. And obviously, Wynn Resorts is a great brand. Them hotels are absolutely amazing. And when we have a look just closely at the detail, we can see that PE trades down at 15, which is pretty good. But back in the day, I believe that it was like a 20 PE when I eventually sold out my shares, and I don't know if I'll ever get back to that PE, but I think that's the PE it was at when I originally was owning the shares. And the dividend yield is 3.67%, which is a really healthy dividend stock really. Anything over kind of a 3% yield, I say, is pretty much a solid dividend company. So I kind of class in Wynn Resorts as a dividend company really. So the reason why the stock is down these prices is, like I say, 2 main reasons, which I just briefly touched on right there. And obviously we had the Steve Wynn allegations, and the company didn't exactly know what direction it was going to go in after that. Obviously, when something like that comes out about a company, it totally like sends it going everywhere, and people don't know what to do. And they've now kind of sorted that out, I believe, and most of the kind of payments they've had for punishments and everything has been sorted. The new CEO's in, he's got his feet under the table, he knows what to do now, so it's kind of everything's settling back down now. So that was probably one of the 2 negatives that was on the stock, and that's kind of been solved now, which is a really good thing. The second thing is we've got the China trade war, obviously, and with Macau in Wynn Resorts, you can kind of class Wynn Resorts as a Chinese company because a lot of its revenue does come from Macau, one of the biggest gaming cities in the world. So obviously when a lot of revenue comes from Macau, the China trade war, that's obviously going to affect it. So depending on how the China trade deal does, obviously that will affect Wynn Resorts. So we'll see what happens there, but even though there's been a lot of negative news put out for Macau and a lot of pressure from that kind of side of it, when we do look into the actual last earnings reports from Macau, the numbers weren't actually too bad, and they were still growing at a little bit of a percentage. Obviously, they're not at the targets that we were expecting for them to grow at, but even so, Macau's not just, falling off the edge of a cliff right now. It's kind of still plodding along, just not at the growth rate that we would hope, and, that's kind of due to the China trade war. But like I say, you've always got to class Wynn slightly as a Chinese company because of it having that exposure in Macau and having one of its casinos and its hotels over there. So those are kind of the two big negatives with the stock, and now we're going to have a look at the positives. And the first positive I've got to say is obviously, the Steve Wynn situation's gone, that's sorted. Macau itself, at some point that China trade deal will sometime happen, I believe, at some point, and even so, it's still doing okay with that. We look at how Wynn's doing, and since I last invested into Wynn, they have expanded the Wynn Resort in Las Vegas, and they are now looking to spend $2 billion on expanding the Macau property as well. Going forward, with the new Boston Resort open, that's obviously going to be increasing revenues for Wynn. Also, the EPS side of it is still going to grow. Now, obviously, we're probably looking at Wynn as kind of a dividend play. And when we look at the dividend play, I think with where we see the revenue and EPS growing outside of it, that will be very safe for Wynn to carry on paying that dividend. I also believe that the revenue will go up and the EPS will grow because of the Boston Resort and also the expansion in Macau. And obviously we have the Las Vegas as well that will carry on doing really well. It's a great brand. And like I say, even you'd say that the biggest positive about this, as well as being at a low PE and having that dividend play, when we look at Wynn Resorts and the actual stock price as well, when we look at that stock price, that is a really low stock price for Wynn. I'm looking at that price right now and thinking that is actually quite undervalued for Wynn. I believe the stock should be probably more valued in the $140 range, $150 range. And if you wanted to hold it even longer, I think that if you were to hold this stock for 3-4 years down the line, it would eventually probably get back up to that 200 price range when it kind of solves a few of these little problems it has left over. But with everything that's going on, then potentially now looking after how the Boston renovation's gone and how it's done so well for the Boston area as well, that they could now look and say to other cities, look, this is what we've done for Boston and this is what we could do for your city going forward. So I think that in the long term, Boston could be looking to open somewhere else up, and that will help the revenues, of course, and the EPS, of course. So it's really going really well for Wynn. I think they've really turned the corner right now, and like I say, as well as having a great dividend play here, I believe that if you hold this stock, you're also going to get a nice price return on that stock itself, because I believe that's kind of undervalued at these prices right now. So from here, am I going to go and buy Wynn Resorts? Now, obviously, I've held this position before, and it was one of my favourite positions to hold previously, and I see nice price return I can get from that stock going up. I also see nice dividends return from the stock. So it is a stock I really like. The one major thing that puts me off this company right now is that I currently have JD.com and I also have Alibaba. Now I'm going to class Wynn Resorts as a Chinese company as well, because it does rely on a lot of income from China. And it kind of, if that trade deal doesn't happen for a long time, that will carry on holding Wynn Resorts back, and probably the share price won't go up. So I don't want to get too heavy on that China exposure. And for me, to be honest with you, I do like this company. I do rate the company as a buy. I think Wynn would be a really good buy, and if you're looking to add it into your portfolio, I think it's a good opportunity to go buy the stock. For me, I'm just kind of like seeing if I can balance it out or not, but it's one that I'm considering over the next few weeks. So if I will think about it and see if I do make a decision to go buy the stock myself. It just depends on how I feel about the portfolio balance, my stock portfolio balance, if it's good for it or not. So I'm going to have a think about it over the next few weeks and then decide from there. But like I said, if I do ever go buy the shares in Wynn, I'll let you know. I'll update you, and I'll do an update about the price that I bought the stock at. And like I say, I'm always quite transparent when I am doing some investment in or selling shares in the stock market on this stock market channel. So like I said, I'll update you. So guys, thanks for watching the video. If you could video, like, subscribe, and I'll see you on the next video.